Most buyers know their credit score. They know roughly what they make in income, and they probably run the numbers through a mortgage calculator a few different times. But does that mean you're financially ready, truly ready to buy that home? We're going to talk about what that actually means to be financially ready beyond credit and income, really get you prepared to buy that next home. What's coming up? Welcome into the Smart Mortgage Show. Ben George with Bill Litton, Regional President at Cross Country Mortgage. Glad to see you on another video here as we tackle what it means to be financially ready. And I like this conversation, Bill, because I think, a lot of people just assume if I can get my credit number up to where it needs to be, and if I'm making enough money, I'm ready to buy a house. But it's not that simple, is it?
Yeah, it's basically like I've got this pre-approval and it says that I can buy a house. So that is one piece of the puzzle. I think the more important piece of the puzzle is to be truly ready, or you're financially ready. You understand all sides of this equation, which again, you're pre-approved. Now we know lenders have a habit, or they are known to put you in a bad financial situation where you can borrow enough money where you're not going to be able to go out to dinner or go to a concert or a ball game or have fun tied to your house. Being financially ready is understanding that and some other key concepts we're going to talk about.
Yeah, these other key concepts are important to keep in mind as you go into this home buying process. Make sure you're checking all these boxes, right? And again, talking with a good lending team will kind of help you get prepared in all these different areas. That's what Cross Country does with their customers every single day. So I want to start off with the emotional readiness, Bill, because man, this is a big, big moment in your life, and one that you're probably only experience maybe 2, 3, 4 times, maybe at most of the course of your life. So there's a lot of emotion that goes into buying a home. So what would it mean to be emotionally ready?
So being emotionally ready, I think one of the biggest pieces of being emotionally ready is understanding the financial aspect of the investment that you're making. And here's an example. If you bought a house, and this happens, I think, a little bit more in our market, this doesn't happen a lot, but down at the Jersey Shore, right down in some of the vacation areas, this can be a little bit more common. What if you bought a beach house and the value dipped 5% after the first year? Would you still feel good about the purchase? Would you be totally freaked out? Well, we talk through that stuff. We want to make sure you're thinking about all sides of the equation, because if in your mind, dropping a few percentage points in value would have you totally freaked out, you may not be ready. Or then just the fact that we're having the conversation and knowing about the possibility, you're more ready for that possible outcome to happen. And here's a conversation I had with a customer yesterday who is very savvy, but really took the words right out of my mouth and said, I'm buying this home to live in it for 5 to 10 years. If I look at it like it's one share of stock, I'm more concerned about the value in 5 or 10 years than I am in 1 year. So annual fluctuations, although could be a slight dip, I'm not going anywhere for 5 to 10 years. And that is where my time horizon is for this purchase. So I'm really not worried about timing the market as much as time in the market. And having these conversations and just getting people to think about these things, I think largely helps with their emotional readiness.
Yeah, and that's important now too, because everybody's trying to time the rates and get the best possible number there. Hey, maybe home prices are so high, I'm expecting them to come down. I'm going to wait for that and make sure everything times up perfectly before I move in. And again, when you're looking at it from that kind of that short-term perspective, it's going to be very, 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 very difficult to make sure everything works out for you. So again, that emotional side is a big part of this equation. All right, Bill, what about our second kind of piece here? What is that next financial readiness truly entail?
Cash flow or monthly budget confidence. And this one's huge. And really what this is saying is, okay, I qualify for the mortgage, my debt ratio works, but how does this payment fit into your budget? If you were to look at, a $4,000 a month payment versus a $6,000 a month payment. And the delta between the two is $2,000. And although you could make both payments relatively easily, put $2,000 a month into a compound interest calculator on, say, some kind of an S&P type investment vehicle, and then go down the road 20 or 30 years. That's going to be a very different retirement age and retirement income. And although you could afford both of those easily today, what does that mean for tomorrow? We want to make sure that things fit into your budget today and don't derail your retirement goals. So monthly budget, monthly payment, understanding all your monthly expenditures, super important.
And this is probably where a lot of people get buyer's remorse, right? If they kind of bite off more than they can chew, and that look, that's got to be a spot where a lot of people are in right now. Where, hey, because in order to get the house I want, I'm going to be paying much more than I would have 5 or 6 years ago. I'm going to try to max out that top end of the budget to get as close to that as possible. But to your point, like that can be very dangerous.
It could be. And, Ben, sometimes it's not. Sometimes you can get to the top end and keep all your financial goals intact. But let's go through that exercise before you've signed a contract and handed over a deposit or gone to settlement, and make sure that we're, mapping this out correctly, doing some strategic planning up front.
Yeah. So that cash flow readiness, such an important piece of being financially ready. All right, Bill, that brings us to our last one, stress tolerance. So what all does this entail?
Ben, I think it's the idea of, some people say, well, I want to have some money put aside if my hot water heater, or I should say water heater, it's not a hot water heater, but if my water heater breaks, I should have some money set aside. Well, it's not if, it's when. Go into this purchase understanding that there's going to be maintenance. In the budget, we like to put some kind of a monthly maintenance figure in there so that you're saving for when these things occur, so that you're not stressed out. Because I've seen people who are in fantastic financial position, plenty of money saved, great credit, never missed a payment in their life. They make a great living, and the littlest thing pops up and it literally derails them emotionally, and it's not necessary. So having information and a plan to say, I know these things are going to happen, and I'm accepting that up front. When it happens, you've already expected it to happen. So it's not going to be a shock. It's not going to knock you off your game. And it's going to be a much more pleasant experience. That's for sure.
Is that something you help prepare people for, or is that something you kind of have to kind of do on your own and do the homework and the research on what all goes into being a homeowner?
Yeah, well, you know what, Ben? I mean, part of the purpose of the podcast is to get this information out there to as many people as possible so that it's not an unknown. And in our process, we're very upfront with understanding all sides. It kind of starts with we got to make sure if buying a house makes sense at all. And then understanding if it does takes these types of considerations and puts them under the microscope to see, look, there are people that, and I think it's a very small percentage of the population if we educate correctly, but there are some people that really, I don't think they have the bandwidth or the time, the energy to handle those issues. And maybe renting, where all that's taken care of, is the best option. We ultimately educate and help people get prepared for these situations and can move people from renter to buyer most times. But the fact of the matter is, not everybody's meant to buy and own and have that responsibility. But we want to help flush that out. Understand if it really makes sense for you to do so.
Yeah, and you begin having those conversations right now just by texting the word LEND to 21,000 and begin that conversation with Bill and the team there at Cross Country Mortgage. So to kind of wrap this up, Bill, the big takeaway is, look, pre-approval, yeah, it means, yeah, you can buy. You can buy right now. But should you buy is a completely different question that you have to work through this process and a lot of these different factors.
That's it. Yeah, we want to make sure, if you're going to make this huge investment, great responsibility, that it really is the thing that makes the most sense for you.
Awesome. Well, take advantage of that opportunity to meet with the team there at Cross Country Mortgage. All the contact information is down in the show description to make it easy for you. And also make sure you check out all the episodes, right? As we kind of go through a lot of this process, if you want to prepare yourself as much as possible, we've tackled a lot of topics along the way that hopefully can answer a lot of your questions, but always reach out to really dive into your specific situation with a good mortgage lending team like the team at Cross Country Mortgage. That'll do it for us here on another episode of the Smart Mortgage Show. For Bill Linton, I'm Ben George. Take care. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Linton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.